Okay, let's unpack this. Real estate, mortgages. Sometimes it feels like a whole different language, doesn't it?
It really can. So much jargon.
But for this deep dive, we're getting really laser focused.
Yes.
We're looking at the legal instruments, liens, and escrows for VA guaranteed home loans specifically.
Right. And what's great is our source here is the actual VA Lender's Handbook.
Exactly. No guesswork.
We're seeing the rules, the guidelines that lenders have to follow. It's like getting the official playbook.
Yeah. So our mission today is really to cut through all that complexity, make sense of these, essential legal and financial tools just in the VA context.
Hopefully clear things up for folks.
Yeah, aiming for that aha moment.
Yeah.
And honestly, I think we might find some surprising things along the way.
I wouldn't be surprised. Okay, so where should we start? Maybe the basic paperwork. Security instruments.
Good idea. And the first surprising thing, maybe, the VA doesn't actually have its own specific mortgage form that lenders must use.
That's right. You'd think they would, wouldn't you?
Totally. I pictured some standard VA Form 123.
Nope. The key thing is whatever form the lender uses, it just has to do the job.
Yeah.
Meaning it has to establish the required the legal claim on the property.
Okay.
And obviously it needs to follow VA rules and state laws. Both.
Right. And it's not just general legal stuff, is it? There are specific VA clauses that have to be in there.
Exactly. 5 of them. Non-negotiable. They have to be part of those security instruments.
Let's list them out.
Okay. You've got the assumption approval clause, the acceleration clause, the funding fee clause, the processing charge clause, and the indemnity liability assumption clause.
Okay, quite a mouthful there. Let's break those down.
Yeah.
The assumption approval one, the handbook really stresses how obvious it needs to be.
Oh, yeah. It basically yells at you in all caps. This loan is not assumable without the approval of the Department of Veterans Affairs or its authorized agent.
Yeah, miss that.
Exactly. It's designed so anyone looking knows right away you can't just take over this loan. You need the VA's okay.
It's a big protection for the VA, making sure the next borrower qualifies.
Precisely. And keeps their guarantees solid.
Okay, and then the other 4 clauses you mentioned are tied to that assumption idea.
That's right. The handbook says the exact wording isn't set in stone, but the effect has to be there. What the clause does is what matters.
Okay, so what's the effect of the acceleration clause?
That one basically says if the property gets sold or transferred without the VA approving the assumption, boom, the whole loan balance can become immediately due.
Wow. So it really backs up that not assumable without approval warning.
Directly. No wiggle room.
Got it. What about the funding fee clause? What's its effect?
That one lays out the fee. If the loan is assumed, there's a fee 0.5%, 0.5% of the outstanding loan balance at that moment.
Okay, payable to?
Payable to the loan holder,
Yeah.
who then passes it to the VA, essentially. Think of it like a little transfer fee.
But there's a waiver sometimes.
Yes, important point. That fee is waived automatically if the person assuming the loan is exempt under the rules, the U.S. Code section about VA fees.
Good to know. I could save someone some money. Okay, next one. Processing charge clause.
Simple enough. This lets the lender charge a fee to actually process the assumption application.
Covers their admin costs, checking credit, paperwork.
Exactly, checking out the new borrower. And the fee can't be more than whatever the VA's current maximum limit is.
Okay. And the last one, indemnity liability assumption clause.
This one's about responsibility. If someone assumes the loan, they agree to take on all the original veteran's obligations under that loan.
Makes sense.
And crucially for the VA, the new borrower also has to indemnify the VA.
Meaning protect the VA from loss.
Exactly. They legally agree to cover the VA if the VA ever has to pay out on the guarantee because of that assumed loan.
Okay, so all 5 clauses work together. They make sure if an assumption happens, it's done properly with a qualified borrower and the VA is still protected.
That's the goal, a controlled and secure process.
All right, let's shift gears. Something called the escape clause and the notice of value, or NOV. This sounds really important for the veteran.
It absolutely is, the escape clause. It's mandatory. It has to be in the sales contract for every single VA guaranteed loan.
Before closing.
Absolutely before closing. And the lender is responsible for making sure it's there.
What if it's missing?
Big problem. The VA could actually refuse to guarantee the loan.
Wow. And it's not just the lender's job, right? Builders, realtors?
Right. The handbook points out they share responsibility, especially on new construction deals signed by the vet and the seller.
So what's the purpose? How does it protect the veteran?
It's all about the VA's valuation, the notice of value, or NOV. This clause protects the veteran if that NRV comes in lower than the price they agreed to pay in the contract.
Okay, so if the VA says the house is worth less than the contract price.
The escape clause gives the veteran an out, a clean break. They can walk away from the deal without losing their earnest money or facing any penalty.
A true escape.
Exactly. They aren't forced to buy a house for more than the VA thinks it's reasonably worth.
But they can still buy it if they want to, even if the NOV is low.
Yes, that's the other key part. The clause specifically says the buyer has the privilege and option to go through with the deal anyway.
So they can choose to pay the difference out of pocket if they really want the house.
Correct. They just can't be forced to or penalized if they back out because of the low valuation.
And the handbook actually quotes the exact legal language for this clause.
Yes, it comes straight from the Code of Federal Regulations. Very specific wording to ensure that protection.
It really emphasizes protecting the veteran's financial interests. Okay, let's move to title limitations. This is about who owns the property legally.
Right. The VA has rules about the kind of ownership stake the estate the veteran needs to have.
We want to make sure the ownership is clear and solid.
Precisely. Generally, the title has to be what they call acceptable. Acceptable to informed buyers, title companies, local attorneys. Basically, it needs to be marketable. Easy to sell later.
Any specifics? Like trusts?
Yeah, they mentioned that a beneficial interest in a revocable family living trust can work, but under specific conditions.
Like what?
The veteran needs a lifetime right to use the property, the VA's lien has to cover the whole thing, and it all needs to be valid under state law. It's about ensuring the VA's security isn't compromised by the trust structure.
Makes sense. Now, who actually needs to be on the title? Sometimes spouses or others are involved.
The VA rule is pretty clear here. Anyone who signs the mortgage, note the promise to repay. Or anyone whose name is on the deed of trust, the document securing the loan,
Okay.
they must hold title to the property. So everyone obligated on the loan has to be an owner, and every owner listed has to be obligated on the loan.
No mismatches allowed. Got it. What about things like title insurance or getting a lawyer to review the title? Does the VA require that?
Surprisingly, no. The VA itself doesn't mandate title insurance or an attorney's opinion letter.
Really?
Yeah. But lenders can absolutely have their own requirements.
So the lender might still insist on it for a VA loan.
Very likely, yes. It's standard practice for most lenders. The VA just cares that the title itself meets their fundamental standards: legally sound, marketable.
Okay. Now, what about restrictions?
Yes.
Things that limit buying or selling the property. How does the VA view those?
Generally, the VA doesn't like restrictions on purchase or resale. They prefer clean title.
But there are exceptions.
There are. Some situations might have restrictions, and lenders need to be aware. If unsure, they should check with the VA. Sometimes formal VA approval is needed.
And the veteran needs to know too.
Absolutely. The veteran has to be fully aware and provide written agreement to any restrictions when they apply for the loan.
Can you give examples of restrictions that would need VA approval?
Sure. Like if a state or local program helps with the purchase but says the loan accelerates, becomes all due if it's assumed later by someone who doesn't qualify for that program, that needs VA review.
Okay.
Or programs for affordable housing might limit the resale price or who you can sell to for a while. Those usually need VA approval too.
Age restrictions.
Even some age restrictions might need VA approval, especially if they could cause hardship or increase risk. The VA might refuse those.
What about things that generally don't need VA approval? More common stuff.
Yeah, like minor encroachments a fence slightly over the line, or standard utility easements for power lines, water pipes.
Right.
Or reservations for mineral rights, timber, things like that. Usually okay without specific VA approval.
But they still matter.
Yes. They still have to be considered by the appraiser when figuring out the property's reasonable value. And if any restriction, even a common one, actually impacts basic livability, then VA approval is needed.
So it all comes back to value and usability for the veteran. What if these title issues aren't disclosed up front?
That's a big risk. Any title limitations must be listed on the notice of value. The appraiser needs to see them.
And if the lender finds something later, before closing?
They absolutely must get the VA to review it, determine if it significantly affects value or marketability.
Why? What's the consequence if they don't?
The VA could deny the guarantee later. Or if there's a claim, they might reduce the amounts they pay. It's a critical step for the lender.
Definitely sounds like something lenders need to get right to avoid major headaches. Okay, let's touch on some less common agreements. Land sale contracts and option contracts.
Right. The VA can guarantee loans secured by land sale contracts, but only for improved residential property, similar to a mortgage guarantee.
Are there special conditions?
Yes. Two main ones. First, the land contract has to include all 5 of those mandatory VA clauses we talked about earlier.
Assumption, acceleration, funding fee, processing charge, indemnity. Got it.
And second, the contract must be officially recorded in the public records. Creates a clear legal trail.
What about refinancing if someone has a land contract and wants a VA loan later?
Possible, but specific rules apply. The key is, when the VA refinance closes, the veteran must get full legal title to the property.
Okay.
And the new loan has to be a standard mortgage note secured by a mortgage, not just a refi of the land contract itself. They want that direct ownership security.
Makes sense. Now, option contracts, where someone has the option to buy later.
Those are different. The VA will not guarantee a loan just for an option contract itself.
Right.
But if the veteran exercises that option and actually decides to buy the property, the VA can then guarantee a loan for the unpaid purchase price at that point.
So the guarantee kicks in for the actual purchase, not just the option period.
Exactly.
Okay, clarifies those. Let's move to something called secondary borrowing. Sounds like maybe having 2 loans.
That's basically it in this context. It's when a veteran gets a second mortgage at the exact same time they get their VA guaranteed first mortgage on the same property.
So 2 mortgages from day one. Does the VA allow that?
They do, yes, but with some important conditions.
Like what?
Well, first, the veteran can't end up in a worse financial spot than if they just had the single VA loan covering everything.
Okay.
Second, the total amount borrowed the first VA loan plus the second mortgage cannot exceed the VA's notice of value for the property. No borrowing more than it's worth.
Makes sense. Any other requirements?
Yes, there's a list of specifics the second mortgage terms have to meet, found in Table 1 of the handbook chapter.
Can you hit the highlights?
Sure. The lender needs full documentation source, amount, terms of that second loan. Veteran has to agree in writing.
Okay.
Crucially, the second mortgage has to be junior, meaning the VA loan gets paid first in foreclosure.
Subordinate liens. Got it. What can the money from the second loan be used for?
Things like closing costs, maybe a down payment if the lender requires one for some reason, but not to cover the difference if the purchase price is higher than the NOV.
Can't use it to bridge that appraisal gap?
Correct. And no cash back to the veteran beyond what they personally put in, trying to avoid over-leveraging.
And the veteran has to qualify for both loans?
Absolutely. They have to be underwritten and qualify for that second mortgage payment too. It counts in their debt ratios.
Interest rate on the second.
Can be higher than the VA loan, but needs to be within industry standards for second mortgages, not predatory.
What about assumability? Grace periods.
Should be roughly similar to the first mortgage in terms of assumability, and needs a reasonable grace period before late fees or foreclosure starts.
The handbook mentions sometimes these second loans come from government agencies, nonprofits, even builders or sellers, and might have unusual terms.
Yeah, that can happen if a lender sees unusual terms or thinks an exception might be needed.
What should they do?
Best bet is always to consult the VA Regional Loan Center, RLC, for that area. Get clarification up front.
Good advice. Avoid problems later. Okay, what if a veteran wants to buy a property that already has liens or debts on it? Delinquent taxes, old mortgages?
This goes back to a core VA rule. The VA guarantee loan must be a first lien, period.
So those existing debts
Have to be dealt with, either paid off completely before or at closing, or formally subordinated so the new VA loan takes first priority.
No exceptions to the first lien rule.
None. And here's another key point. If the property has delinquent taxes, assessments, prior mortgages, other liens, and the veteran agrees to pay them, the VA loan cannot be guaranteed if the total debt, the new VA loan amount, PLUS, all those unpaid old debts, exceeds the VA's reasonable value for the property.
Again, keeping the total debt load at or below the property's value.
Exactly. Protecting the veteran and the VA's guarantee.
Okay. Now, slightly different type of lien. Ones for community services, like HOA fees, private roads.
Yes, liens for maintaining shared amenities. The general VA policy holds. Their loan should be first, subject only to normal stuff like taxes, government assessments, ground rents.
So if a private entity like an HOA wants their lien to be superior, meaning it gets paid before the VA mortgage in foreclosure,
that generally requires specific VA approval.
what does the VA look for when deciding whether to approve that?
Several things. Is the lien necessary for the community? Does it harm the veteran or the government's interest? Is there a good reason it can't be subordinate? Are any fees reasonable and limited?
And they need VA approval before the lien is recorded.
Absolutely. Especially important for builders and developers. Don't record superior private liens on properties intended for VA financing without getting the VA's okay first.
What kinds of these liens might be okay?
Standard taxes, assessments, ground rents, obviously. Also, liens for providing essential government-type services that the local municipality doesn't provide, a private sewer system.
Okay.
Or liens augmenting inadequate government services. And very commonly, liens for normal HOA costs in planned developments. Maybe even some pre-existing liens in established areas.
What's generally not approved?
Liens for services that the local government already provides adequately through public funds. If there's a public park, a private park lien probably won't get superior status. Avoids double paying.
Makes sense. Okay, let's switch to power of attorney, or POA. This must be helpful for service members overseas.
Definitely. The VA allows a veteran to appoint someone, an attorney, in fact, using a POA to sign loan documents for them. Huge help if they can't be physically present at closing.
But the POA itself has to be legally solid, right?
Yeah. Absolutely. It must be legally valid under state law. That's crucial to make sure the mortgage is enforceable and the title is clear if foreclosure ever happens.
And the person using the POA needs it for other steps, too.
Yes, they'll need it to get the Veteran Certificate of Eligibility, COE, and handle parts of the loan processing. And remember, standard military POAs often have time limits, like maybe a year or duration of deployment.
Does the veteran still need to specifically agree to the details of the loan, even with a POA?
Yes, critical point. The VA needs written proof the veteran consented to the specific transaction.
How can that be shown?
Either through a general POA, but only if the veteran personally signed the sales contract and the loan application clearly showing intent for a VA loan on that property,
Wow.
or through a specific POA. And that specific POA needs details. Intent to use entitlement, how much, loan purpose, property ID, price and terms, and the veteran's occupancy intent.
Very thorough. What's the lender's big responsibility here?
Huge responsibility. The lender must verify the veteran is alive at the time of closing. Alive. And if on active duty, not listed as missing in action, MIA, the handbook even gives the exact certification wording the lender has to use at closing.
What if they don't verify and the veteran was deceased or MIA?
The VA could deny the guarantee. It's a serious verification step.
What about digital signatures with POAs? Allowed.
Yes, VA accepts e-signatures if they comply with the e-Sign Act, so that helps with remote situations.
Does the VA issue a commitment for the loan if a POA is used?
Yes, they can issue a certificate of commitment, but only if there's a valid POA and proof the veteran consented to the specifics. They won't issue one if they know the vet is MIA or deceased. Usually, the commitment will mention the POA condition.
Any exceptions if getting specific consent is super difficult?
The handbook mentions possible hardship exceptions, but likely rare and needs VA review.
So POA is doable, but requires extreme care with the rules.
Okay.
Shifting it, lender review of sales contracts for new construction, proposed construction.
Right. Before the lender even requests an appraisal on a proposed construction home,
Yeah.
they must review the sales contract first.
What are they looking for?
Basically, is the contract acceptable? And does it contain any unfair provisions that could hurt the veteran?
If they find unfair stuff.
They have to request revisions, get those unacceptable clauses changed.
Do they ever report builders who use bad contracts?
They're supposed to. If a builder repeatedly uses unfair contracts that prejudice veterans or the government or won't cooperate on changes, the lender should report that pattern to the VA.
And when the loan actually closes, what does that signify about the contract?
Closing means the lender has determined the contract is acceptable according to VA guidelines. They've done their review.
The handbook lists examples of unfair provisions. Can we go over a few?
Sure. Like a clause saying the veteran forfeits their down payment if they can't get VA financing. Unacceptable.
Makes sense. What else?
Escalator clauses in lump sum contracts where the price can go up due to builder costs unless the veteran has a clear option to cancel and get a refund if they don't accept the higher price.
Okay. Restrictions on selling later.
Generally unacceptable unless they fit specific narrow exceptions in the regulations.
What about waiving claims against the builder if the work isn't done right?
Broad waivers of claims for non-performance are usually a no-go. Exceptions might be a final inspection statement at closing or settling a specific real dispute later.
Basic info missing from the contract.
Also unacceptable. Needs an accurate property description. Needs to say who pays special assessments or improvement bonds.
Completion date.
Absolutely. Needs a definite completion date or an option for the vet to cancel with a refund if it's not done on time.
And the builder has to promise to build according to plans.
Yes. The contract must obligate the seller builder to complete it according to agreed upon plans and specs.
Seems like solid protection for veterans buying new homes. Okay, what about minor stuff not finished at closing? Escrows for postponed completion.
Right. Sometimes minor things, walkways, landscaping, maybe a detached garage can't be finished due to weather or other reasons beyond the builder's control.
So the vet can still move in.
Yes, if the main house is suitable for occupancy. An escrow can be set up to handle the completion of those minor items later.
How does that work? Withholding money.
Exactly. An amount, usually 1.5 times the estimated cost to finish the work, is withheld from the seller's funds at closing.
Held where?
Held securely in an escrow account, then released to the seller once the work is done satisfactorily.
What are the conditions for setting up this kind of escrow?
Okay, several things. Main house must be done and livable. The delay must be beyond the builder-seller's control. The delay time frame needs to be reasonable, usually 90, 120 days, and the escrow amount must be at least 1.5 times the estimated completion cost.
Are there times when an escrow isn't needed, even if minor stuff is left?
Yes, a few exceptions. If it's just minor landscaping delayed by weather, or if the total cost of all remaining items is under $2,500, and there's good assurance it'll get done quickly, that 90, 120 days again.
Does the lender need VA pre-approval for these escrows?
Nope, not if it meets those guidelines. The lender is responsible for setting it up correctly and making sure the work gets finished.
Does the VA check up on these?
They do random monitoring after closing,
Yeah.
to make sure things are handled right.
What's the procedure for the lender?
Close the loan, escrow the funds, upload the loan package to WebLGY with proof of the escrow, often a VA form. Then, once work is done verified by inspection or lender vet certification for minor stuff, release the funds.
Is there an alternative to holding cash in escrow?
Yes, sometimes a commercial letter of credit can be used.
Similar conditions.
Pretty much. Needs to be 1.5 times the cost estimate. Needs a trust agreement outlining terms. Must be irrevocable and good for at least 6 months past the completion date. And VA needs a copy.
Okay, good options there. Let's talk about something fundamental. Hazard insurance. Homeowners insurance.
Absolutely critical. The lender is responsible for making sure the property has adequate hazard insurance before closing.
And keeping it.
And ensuring it's maintained for the entire life of the loan. The amount and type have to be what's customary locally to cover typical risks.
What happens if there's damage in an insurance payout?
Those funds have to be used either to restore the property or to pay down the loan balance.
Okay. What about flood insurance? That's separate, right?
Yes, and very important. If the property is in a special flood hazard area, SFHA, according to FEMA maps, the lender must ensure flood insurance is obtained and kept. This responsibility is ongoing, even if FEMA changes the maps later.
Does the appraiser's opinion matter here?
Not ultimately. The lender has an independent duty to verify the flood zone status and ensure coverage if it's required. Can't rely solely on the appraisal for that.
Does it cover just the structure?
Usually, but sometimes personal property securing the loan, like in a manufactured home, might also need flood coverage.
How much flood coverage is needed?
It's the lesser of the outstanding loan balance or the maximum coverage available under the National Flood Insurance Program.
Can the VA guarantee a loan if flood insurance isn't available for a property in an SFHA?
No. If the property is in an SFHA and flood insurance can't be obtained, the VA cannot guarantee the loan. Full stop.
What if the lender messes up on the insurance requirements?
VA might reduce the guarantee payout if there's an uninsured loss caused by the lender's failure to ensure proper coverage, unless the VA grants a waiver.
So lenders need to get the amounts right.
Yes. But if they do maintain the required minimum coverage, future claims generally won't be cut for inadequate coverage unless the property significantly changes later.
You mentioned homeowners associations earlier. Any insurance issues there with their master policies?
Yes, this is a really important point, especially for condos or townhomes. HOAs often have master policies, but they might not cover everything inside the individual unit. You hear about studs out policies.
Yeah. Covers the structure but not finishes.
Exactly. It doesn't cover drywall, flooring, fixtures, cabinets, sometimes even interior walls. So the lender needs to review that HOA policy carefully.
To see what's actually covered.
Right. Make sure adequate total coverage is in place. The individual homeowner might need to buy their own supplemental policy, often called an HO6 policy, to cover the gaps.
So don't just assume the HOA policy is enough. Due diligence needed. Okay, now escrow accounts again, but this time for taxes and insurance payments. Does the VA require lenders to set these up?
No, actually, this is pretty clear in the handbook. VA does not require lenders to establish escrow accounts for property taxes and hazard insurance on VA loans.
But the lender is still responsible for making sure they get paid.
Absolutely. Escrow or no escrow, the lender has the underlying responsibility to ensure taxes and insurance premiums are paid on time. That protects their collateral and the VA's guarantee.
And if they do choose to escrow,
then they have to follow all the applicable laws, like roof pay, that govern how escrow accounts are managed.
Okay, clear enough. Last big topic, homebuyer assistance programs, or HAPs. How do these fit in with VA loans?
VA generally allows veterans to use HAPs from government or private groups to help with buying a home.
Does the lender need VA approval for these programs?
Usually not up front. There's blanket approval for state, county, and city government HAPs. These are different from the DoD HAP, by the way.
What about non-government HAPs?
For those not covered by the blanket approval, the lender should send the program details to the VA RLC for review.
What are the lender's main duties when a HAP is involved?
The basics still apply. Make sure the borrower meets VA credit standards. Get a VA appraisal. Confirm the property meets VA minimum standards.
What if the sales price is higher than the VA's reasonable value, the NOV? Can HAP funds cover that gap?
Yes, if the HAP assistance is provided as a true grant, it has to be non-repayable funds covering that difference. The vet can't borrow extra to cover the gap above the NOV. It must be grant money from the HAP.
Got it. Some HAPs require the buyer to live there for a set time, right?
Yes, that's common. If the HAP has an occupancy requirement, the lender needs to get the borrower's signed acknowledgement of that rule at closing and keep it in the file in case VA asks later.
Final point on HAP fees. Can lenders use HAP money to cover fees the veteran isn't normally allowed to pay on a VA loan?
No, definitely not. VA has rules about which fees are unallowable for the veteran, especially if a 1% origination fee is charged. Lenders can't charge those fees to the vet and then just use the HAP funds to pay them. That would defeat the purpose of the assistance.
Right, the HAP money is meant to directly help the buyer, not cover fees. The lender shouldn't be charging the vet anyway.
Exactly.
Wow, we covered a lot of ground there. From security instruments and clauses to title, lands, escrows, insurance. It's really clear how all these legal and financial pieces fit together in the VA loan process.
It really is an intricate system, but understanding these details, I think, is empowering, not just for lenders, but for veterans going through it. You see the protections built in.
Absolutely. You know, considering just how detailed these guidelines are, what does it really say about the VA's commitment to protecting veterans when they're making maybe the biggest purchase of their lives?
I think it says everything. The level of detail, the specific requirements, the checks and balances. It all points to a really deep fundamental commitment to making sure veterans get a fair deal and are protected throughout the homeownership process. It's not just about providing a loan benefit. It's about safeguarding their interests every step of the way.
A really comprehensive safety net. Well said. And of course, for anyone wanting the full chapter and verse, the VA Lender's Handbook is the place to go.
The ultimate source.
Thanks so much. This was incredibly informative, a fantastic deep dive.